think the weakest link is actually on the finance piece of things. What we're seeing around the world is that 85 to 90% of all the investment in the energy sector goes to developed countries and is happening in China. And therefore, we're looking to see how can we be driving those investments in developing countries that have so much potential and desire to go renewables, and looking at how to bring down the cost of capital there, and also many countries are working to get their next national climate plans in place. That's one of the key issues in the international negotiations right now, where they can have long, loud, and legal policies to give that investor certainty for the private sector to move in.
Financial sector will really only come in increasingly if the returns are there, if the performance is right. Is it right?
Well, I think there's two thoughts on that. One is, yes, the performance is right on renewables. I think we see that growth in the industry. We see the need in countries that do have higher risks to be dealing with those risks through mechanisms like guarantees. And the other thing I think more and more is we're seeing that people are understanding that they have to calculate in the full economic costs. That means also the costs that are coming from these climate events that are happening around the world, disrupting, of course, homes, but also supply chains for companies. And that's the new normal that we are in right now, and we need to be moving those things together. And then, yes, absolutely, efficiency, renewables, that works.